Joining me right now with more is the president of the New York Stock Exchange, NYSE President Tom Farley, with us this morning. Tom, good to see you.
Good morning.
Thank you so much for joining us. So first, on this Trump rally, what the heck do you think is powering this, and do you think that it continues? I mean, early on, I was expecting the market to rally because of a policy of lower taxes and rollback of regulations. Is that still the underpinning of this market?
Yeah, you stole my thunder, Maria. I mean, it's exactly that. I think the thing that surprised on election night was not only the Trump victory, but and a fairly overwhelming victory, at least with respect to the Electoral College, but also what happened in the Senate. Yeah. And so when we all woke up the next morning, this idea of, hey, taxes could go from 35, maybe not all the way to 20, but down considerably, and regulations could be rolled back, are what really jolted the market and continue to this day.
So this is a real big positive. The president-elect has been very vocal about his idea that rolling back regulations is even more important than lowering taxes, because this is a pro-growth agenda. But in a tweet yesterday, he says this: there would be a 35% tax on businesses that leave the United States. Now, you're the steward of an institution that is home to so many global companies that have businesses overseas. What's your take on this 35% tariff threat?
Well, Donald has said a lot of things that ultimately end up rolling back or watering down. We have around about 500 consumer companies listed on the New York Stock Exchange. This idea of massive tariffs on imports clearly would not be welcome. But when you look at the tax plan as a whole, it's more welcome. Again, taking taxes from 35 to 20, being able to immediately write off depreciation. So there's still a sense of optimism that some of these more concerning ideas with respect to trade won't come to fruition. If they do and they continue to march down the track, I think you're going to see a different view from the market.
Well, that's the thing. I mean, when we had Wilbur Ross on last week, he basically said, look, this is a tool, and we have a lot of tools, and this is one tool to use to get companies to give America a second look. You agree, then it's just a threat. It's a serious threat, though. I mean, what happens with a 35% tariff? Does that mean products go higher? Does that mean profits get pressured?
For the last 2 or 3 years, the #1 issue on the minds of CEOs, when I talk to CEOs, hey, if you were judge and jury, you could change one thing about the environment for operating, it's corporate taxes writ large. So the fact that we're having a conversation about should we have the highest tax rate of OECD nations here in the United States is important. We're going to have to work through the details. We have 500 consumer companies, as I said, and so clearly any taxes with respect to imports and exports will be looked at very carefully. But I'm an optimist. I think the markets are optimistic. The markets are up round about 10% this year. As we sit here this morning, they're indicated up. We may yet again have all-time highs. And so for the moment, we're at a good place.
Isn't it interesting, Tom, you and I sat here earlier in the year. 2016 began with the worst beginning for the stock market of any year. First 2 weeks of January 16, I was working on my year-ender just last week, and I started to look back, and I remembered, wow, that first 2 weeks of January 16, we were down $2 trillion in market value, and now we're ending the year record highs.
Yeah, I feel like it's Groundhog Day a little bit for me, which gives me some concern. I came into this year at the New York Stock Exchange with lots of IPOs lined up. This was going to be a big year. It was going to be just like 2014 when we had 130 IPOs, we raised $80 billion, and those first 2 weeks of the year really leveled the IPO calendar for the first 6 months.
It was horrible first 2 weeks.
Right.
So what does 17 look like? One area of the market that obviously has been slow are IPOs. We want to look at that right now because you've got this year will be the slowest number of IPOs since 2012 when 90 issues priced. This is from Rich Peterson at S&P Capital IQ. Do you think things pick up in 17?
So I've been wrong before, so I should preface it, including on your show about this. It looks very good.
It does.
It looks very, yeah, absolutely. Again, asset prices are all-time high. Volatility is low and stable. Interest rates are low and stable. Our pipeline for great IPOs is significant. And by the way, even though this year was slow, and last year was relatively slow, we had some really great IPOs, meaty IPOs. We had Twilio, which was an exciting tech IPO.
Yeah, that was a good one.
US Foods, which is more of a commercial consumer/industrial billion-dollar-plus IPO, and many others. So the IPO market's not dead, hasn't been dead the last 2 years. and there's reason for considerable optimism. And when the IPO market's healthy, that's a great thing because that's more money to create jobs, to invest in our great country.
Everybody thought that was a new day when the New York Stock Exchange got Twitter. New York Stock Exchange got Twitter. New York Stock Exchange is getting all the technology deals. Are you going to get Snapchat?
So I'm not going to comment on any particular company. And everybody likes to talk about the sexy companies, and Snap is no different than any other. Airbnb, Uber. I will say we are getting the really great tech companies. In fact, if you look over that 2-year period we talked about, I think it's the largest 25 IPOs. Every single one has been on the New York Stock Exchange.
What about Facebook?
So that was beyond 2 years ago. And obviously, I don't wish ill on a competitor. That was a very difficult IPO. Since that day, again, we've won nearly every large IPO, and 25 out of 25 or 24 out of 24 over the last 2 years. You
must be schmoozing, though, the managements of Snap right now and Uber.
In general, as a part of my job description,
you basically
you know my job. I don't refer to it as a schmooze master, but I spend a lot of time with leaders of businesses, but I'm not going to comment on any particular one.
Do you think it's strange that technology has not been part of this huge rally? Financials are up, healthcare is up, all these groups are up on the Trump victory, except tech.
I do think it's strange. In fact, I've actually kind of asked around to some of the smart people, kind of like when I sat down on your set today, saying, why is Italy up this morning? Sometimes when I don't understand it, it bothers me a little bit. And that's how I feel about tech, because the common narrative about, well, Donald's views on immigration could somehow hurt tech. I mean, I just think this tech industry in the United States, particularly what's going on the West Coast, is nearly indefatigable. And I would not have thought that we would see such difficult trading.
Maybe it's just, I mean, as simple as they've got to sell something to buy something else.
Yeah.
Right? And maybe that's the answer for Europe today. Germany's up 1.5%. Do you think money would conceivably come out of Italy and go into Germany on this no referendum?
Well, I mean, it's the best theory I've heard.
Yeah.
But quite frankly, I'm surprised. Similar to tech being down, I'm surprised by the rally in Italy overnight. But you're right. The easiest theory here in the U.S. is, boy, I had to sell something. I'll sell tech because I feel so good about financials or insurance or industrials, given the Trump rally.
Real quick before we go, most important issue that you're looking at, Tom, for the New York Stock Exchange for investors in 2017?
It's really just restoring confidence, both for listed companies but also for our trading customers, because it's been 2 years of just, notwithstanding this 10% increase, of just uncertainty. We had the surprise devaluation of the yuan a little over a year ago that really rocked markets and hurt our IPO markets. That led into this year. We had uncertainty with the election this year, so it's just kind of helping bring a sense of calm, and hopefully that'll result in bringing retail investors back to the trading markets, as well as a greater IPO year in 2017.
You're walking around the floor all the time. You're talking to big investors. Do you think this Trump rally continues? What are you getting in terms of the sentiment? I
think there's a lot of pleasant surprise, maybe even with his cabinet appointments, frankly. And I think, I mean, just sitting in the room out here, you had NYSE-listed Rex Tillerson added to the Secretary of State conversation, Huntsman, Stavridis. These are all three people I know personally. These are good people. They love their country. They're going to do anything they can for their country. And that's the sense on the floor, too, is wow, we're putting together a cabinet, people like Nikki Haley that can help lead this country going forward.
So you like the transition so far?
So far.
Tom, good to see you.
Thank you.
Thank you so much for joining us. Tom Farley, President, New York Stock Exchange.